The short-term price of Bitcoin is now controlled by Wall Street, and they want your Bitcoin. They don't want you to self-custody it. They want you to borrow against it. They want you to trade perpetual futures. On the other side, you're sovereign. Sovereign means you have assets that you can access with no permission from a bank or a broker or a custodian. Completely subordinate means you are in debt to the banks for everything you own. You boycott the Federal Reserve by owning Bitcoin. You boycott the banks by owning it in self-custody rather than custody. I wake up and I say, this week, am I more subordinate or am I more sovereign? And I think it starts with...
This episode has been so much fun to record and I'm sure you will enjoy it. However, I noticed that more than 85% of you are not subscribed to this YouTube channel. And if there is one thing you could do to support us, please subscribe to this channel. It means a lot to us. Thank you and enjoy the episode. Welcome to the show, Simon. We just had Michael Saylor on the show and I felt like I wanted to touch upon geopolitical topics first, but given the fact that there is so much discussion and debate happening surrounding Michael Saylor and his preferred stock product STRC, I would like to touch upon that first to understand your vision when it comes to Michael Saylor and also to the impact he has on Bitcoin or what impact we give him and therefore the markets react to it. So I would like to take it to you when it comes to Michael Saylor and just hear your opinion on him.
Yeah, sure. And I think the question is slightly wrong, no offense to you, but it's a reflection of how people think. They think in terms of personality. So Michael Saylor is an executive of a public company. That public company has a fiduciary duty to shareholders. Those shareholders install a board, and those boards are to represent shareholders. Those shareholders are, I believe, the enemy of Bitcoin, which is the financial industrial complex. That is a complex of asset managers, banks, central banks, financial institutions that all get liquidity from managing other people's money, creating currencies, and they have a network of derivatives, arbitrages, hedge funds, ETF providers, asset managers, the most important of which are in the Bitcoin space, Cantor Fitzgerald as an investment bank, Jane Street as a appointed representative for ETFs, but also a hedge fund, Coinbase as a custodian, and then JP Morgan and various other institutions that create derivative products in order to allow people to speculate. Now, what has Michael Saylor created? Well, he had a public company, and that public company had software connected to intelligence. So already I have questions about that. But in order to recover his company, he did a Bitcoin strategic reserve strategy. All good. But he started eventually turning the whole company into a Bitcoin strategic reserve company. And what that means is that the nature of the products that he created were around speculation and arbitrage of the fact that he effectively transitioned from a software company to a semi-quasi ETF with lots of counterparty risk and no definition in the middle. So what we turn to is a vehicle which is subordinate to the financial industrial complex that had this huge premium per share over the amount of Bitcoin he had on his balance sheet. So at its peak, it was say over 3. And now it's approximately, depending on what gauge you use, either a discount or 1.2. And so what that means is that right now there is, by some measures, a premium over the discount, but the controversy is around he started issuing other securities. One of those was a convertible note, and a convertible note means that you borrow money from the type of investors that invest in corporate debt that want to receive a yield. But if the price of Bitcoin goes up at a certain point, there's a trigger point where it converts into equity. And so once it converts into equity, it dilutes the shareholders because it issues more equity, and he can borrow money in order to get more Bitcoin. And so then the key metric became the amount of Bitcoin per share, but then there's debt. And so calculating the premium or discount became a complicated topic. Then he started going further and further into structured products. And so when the price of Bitcoin is going down, what happens with that convertible debt? Well, if you raised about $10 billion, you've now got $10 billion that at some point may not convert if the price of Bitcoin doesn't go up. So now you've got subordination to not only shareholders, but also bondholders and debt holders or convertible note holders. And so around that, he created another product. And that product was those that want to receive high yield, comparing it to a money market fund, which I think he called digital credit, which is extremely misleading because it is in fact a preference share. And that preference share is designed to stay at $100. And then whenever it goes below $100, you need to either arbitrage it back up or you need to give people a higher yield in order to incentivize them to buy it. And the other way when it goes up. So now what you've done is effectively you've created subordination to equity holders, debt capital markets, and also a vehicle for hedge funds and arbitrages to take those three products and manipulate the price of Bitcoin, which is what the hedge funds can do. So thanks to this, because we now have approximately 850,000 Bitcoin in this vehicle, we have created a tool which in a sense acts as a central bank for paper Bitcoin. And I'm very careful to say that. Paper Bitcoin because it's not real Bitcoin. It's Bitcoin that's held at Coinbase. And Coinbase is another public company that is subordinate to its shareholders. And they have lots of different financial products. Some of those is a custody, some of it is prime brokerage, some of it's leverage, futures, perpetual futures, everything. And so do we have a clear segregated way of understanding what Coinbase is doing with that fund? Well, fine, legal contract determines. But anyway, the point is that now we have, with the combination of the Bitcoin ETF, with the combination of other Bitcoin treasury companies that are taking parts of the most important ecosystem, wrapping them up into a Bitcoin treasury company. And again, I don't say David Bailey, I say one of the largest Bitcoin media companies, a magazine, a digital outlet, one of the largest annual conferences, and a hedge fund wrapped up into a Bitcoin treasury company where Cantor Fitzgerald is doing it. And then he did the same with Jack Mallers. And now you get one of the other parts of the ecosystem owning Bitcoin and borrowing against your Bitcoin. So now you got borrowing against your Bitcoin. What else do you do? Well, maybe you take Blockstream rather than add them back. And then you try and wrap that into a Bitcoin treasury company. Then you also do the same with the Trump administration and Eric Trump and Donald Trump Jr.'s mining companies. Then you do the same with a Bitcoin ETF. So now you've got approximately 3 million Bitcoin across Wall Street wrappers, with strategy being the perfect vehicle to manipulate the price of Bitcoin, with Jane Street, the hedge fund, integrated as an appointed representative where they can issue Bitcoin ETF paper shares. And anytime you want to crash the price of Bitcoin, you can just say, hey, I'm going to sell 32 Bitcoin at $77,000. And then I'm going to buy back 1,555 Bitcoin at $66,000. Now, you can't do that forever, but then that creates a discount to stretch. And now you create an arbitrage vehicle that says if the debt doesn't convert, then he's going to need 10 billion of liquidity. He's got $55 billion worth of Bitcoin. We can control the price, arbitrage it, and make a shit ton of money so that we can then crash the price, margin call those that are borrowing against their Bitcoin, and end up with much, much more Bitcoin in the custodians, which is Coinbase. And so I have no problem with Michael Saylor. I have a problem with the incentives, because this is architecture. And so all this to say that the short-term price of Bitcoin is now controlled by Wall Street. And they want your Bitcoin. They don't want you to self-custody it. They want you to borrow against it. They want you to trade perpetual futures. And they want you having a 10-minute strategy so that they can then rug pull your Bitcoin whenever you want it. Now, fine. Bitcoin is for everybody. I'm not saying this shouldn't happen. I'm saying this is happening. And our resistance against it is not doing what Michael Saylor tells us to do. Because he went from saying that everybody should own Bitcoin in self-custody to everyone should put it in a Wall Street wrapper, to everyone should leverage it, to everybody should wrap it in an Ethereum smart contract, to everybody should use it as digital credit, to everybody should make sure that they buy more and then sell it at the same time as buy it in order to get the optimum vehicle, until eventually there's a bunch of people that don't have any Bitcoin in self-custody, and the financial industrial complex has managed to steal as much Bitcoin from you, and they have the perfect arbitrage vehicle for controlling the short-term price of Bitcoin.
I think there's so many questions that I have when it comes to this, but I had Michael on the show and I actually said, like, he's not as relevant as we all make him, but there is some sort of narrative created surrounding him and the product that he designed in order to push the price even more down, in order to get more fear in the markets, in order to confiscate more Bitcoin. But when we look at the product of STRC and the fact that it's just depacking and there's so much fear surrounding that, what do you think are the outcomes that are going to happen after this in the coming few months when it comes to STRC, but also to Bitcoin?
I think strategy as a vehicle, as again, I said, Michael Saylor has a fiduciary duty to his shareholders. The vision that he has with his shareholders to centralize as much Bitcoin as possible and increase the number of Bitcoin per share. But he has conflict of interest with stretch holders and his debt holders. That creates an interesting scenario. I do not believe the goal is to send MicroStrategy bankrupt. I think Wall Street wants strategy to exist for as long as possible because they have an arbitrage vehicle for hedgies to manipulate the price of Bitcoin. And that's why it is the highest levels of derivatives and calls and everything around it. It is just an arbitrage vehicle, not a Bitcoin accumulation vehicle. An arbitrage vehicle for centralizing Bitcoin. Don't believe the hype. His pitch is digital credit, innovating Bitcoin, adoption, all that stuff. No, it is an arbitrage vehicle for centralizing as much Bitcoin as possible. Now, around that, Cantor Fitzgerald can try and get as many Bitcoin-backed loans as possible, try and do as many margin calls as possible, and send as many of the other Bitcoin treasury companies into Chapter 11. Because once you crash the price of Bitcoin, do a bunch of margin calls, centralize as much Bitcoin as possible, then you want to lock in the price of that Bitcoin at the lowest price, just like FTX did at $17,000, just like Celsius did at $40,000, just like Voyager did at $35,000. Then you lock in the dollar value of the price, you do some M&A, and the financial industrial complex consolidates. But strategy is the goose that lays the golden egg for our enemies. So Bitcoin is money for enemies, and strategy is our enemy. We resist with Bitcoin in self-custody and staying away from borrowing against your Bitcoin and making sure that you become your own custodian rather than being a part of the complex that gives our enemies more power to control the short-term price.
What fascinates me is that we are like in the last inning before the Clarity Act is going to be approved. And until then, it seems like all the market makers or all the parties, the hedge funds, the governments can do whatever they want in order to confiscate as many crypto as they can. How much of a relevance do you see, or like coincidental with the Clarity Act being approved within a few months and the fact that this is happening right now?
Yes, you've got to rewind back a little bit. So we had the Genius Act. What did the Genius Act do? The Genius Act had nothing to do with Bitcoin. The Genius Act was the mechanism for giving banks a head start because they could use their reserves at the Federal Reserve as collateral for issuing a stable coin, as long as they had reserves at the Federal Reserve. It also gave them an advantage, saying that if you want to pay yield on your stable coin, then you need to have a banking license, which ties into Clarity Act, which means that immediately Kraken went out and became a bank. And so now you have a vehicle for turning stable coins into Federal Reserve notes so that you can back them with US treasuries that are issued and custodied by Cantor Fitzgerald. And so again, all this was was a mechanism for creating a covert central bank digital currency. And the number one lobbyists in this legislation was Bank of America, Citibank, and JP Morgan. JP Morgan is the one that is creating a covert central bank digital currency. So right now we had to pass legislation to say no CBDC until 2030. That's because they want to give a regulatory head start to the banks to issue stable coins and to technical companies to have less of a head start because they can't charge yield. And so what does Clarity Act do? All Clarity Act does is it puts everyone in a box. Bitcoin's not impacted because already you can self-custody it. Already it's classified as property for tax purposes, and it's already a commodity, and the only thing that regulates it is the exchanges that are engaging in Bitcoin trade. So are those exchanges going to be regulated by the SEC as securities, the CFTC as commodities, or are they going to be treated as money regulated by the OCC and the Federal Reserve? And so that's all Clarity Act does. What else does it do? It allows us to accelerate the World Economic Forum vision of you will own nothing and be happy. i.e., you take the real asset and we'll custody it, and then we'll issue you a token that is programmable so that we can then just give you an IOU of the asset and we hold the asset for you. Then we can manipulate the price through the financial industrial complex, derivative complex, and we can create a police and surveillance state through the programmability of these digital tokens that will tokenize everything, which was what the head and the interim CEO of the World Economic Forum wanted, Larry Fink. And Larry Fink ended up acquiring some of the companies that were working on security tokens that I invested in, for example, Securitize, custodying with Coinbase, another company I invested in that will hold the custody. And even the brokerage that we created at my company that we sold to Coinbase, Bank to the Future, the brokerage is now being used in a partnership between Coinbase and Larry Fink to securitize everything. This is the World Economic Forum's vision. It has zero impact on Bitcoin. It just literally says how you can issue securities, how you can tokenize everything. And then there's a resistance built into it with all the fraud that the Trump administration has committed through World Liberty Financial. And so you now got 7 Democrats that will effectively say, we'll approve it, but what are you going to do for me? Because of all this fraud you committed with UAE, selling pardons, CZ, Binance, which ended up regulated in UAE, and all the Middle Eastern policies that are being negotiated in exchange for multi-billion-dollar bribes backing those stable coins issued through Binance between UAE and the Trump administration and World Liberty Financial, which is 49% owned by UAE, also owned by the Witkoff family, that is the envoy to the Middle East, also supported with Howard Lutnick and Cantor Fitzgerald with the Trump administration family office. This is just really nice move into the Middle Eastern situation. But Clarity Act is just power to the financial industrial complex with waving we want to become the center of crypto, when the real center of crypto is actually being built out in the tax neutral havens in the Middle East and in various islands of the British colonies like Cayman Islands and everything else.
If you talk about like the entire fact of stablecoins, which is essentially just making a digital version of all the fiat currencies that we have, which then decreases the amount of privacy we have and the amount of control the governments can have on you, have actually increased through that. But then there's a certain group that's actually praising tokenization, which with the recent SpaceX IPO, everybody's trading on-chain because you can all trade the assets. But ultimately, tokenization is also one of those next steps in order to get more control. Because if you own the token, you don't own the actual asset beneath it or the collateral beneath it. Someone else owns it and can generate a yield on top of that. What is your stance on tokenization and the impact that we will have on us as regular persons?
Yeah, it's the opposite of what Bitcoin was created for. This is to give more power to the police and surveillance state in a regulated environment with programmable money that will be integrated with your social credit score that we're currently building on X and the AI data that we're currently sharing with all our chat apps, integrated into Palantir, which is the police and surveillance state that's being built out in war zones and coming home right now. So this is just part of that. And tokenization, through staking mechanisms. So when you create an Ethereum ETF, the more ETH that is held within the Ethereum ETF, the more stakes you give to BlackRock and the custodians. And the same with stable coins, because they're issued on these proof of stake platforms. And so this was simply a covert operation through Silicon Valley funding foundations that created founders that kind of pretend they're doing decentralization, incentivized through pre-mined shitcoins that create proof of stake networks that end up creating what the intelligence agencies and law enforcement always wanted, which is programmable securities and programmable money. And so focusing on that side, you've got this PSYOP, covert operation. At the same time, the reason you're getting stable coins in America is because America is the vehicle for doing this public-private partnership. You get the Trump administration to change the rules and the laws. Then you issue them through private companies. And then their artificial intelligence that's being built in America is integrated into these stable coins as more and more agents start to use programmable money as a predominant form of money in the digital era. On the other side, you have projects like the Bank for International Settlements, which created Enbridge. Enbridge is a network of central bank digital currencies that circumvents SWIFT. And so programmable money is also being used to kill the dollar. And so what you saw is that in UAE, Enbridge became the predominant home in the Middle East, and then it connected into the Chinese central bank digital currency, the Saudi CBDC, the Hong Kong CBDC, the UAE CBDC, and the Thailand CBDC. So this is a parallel programmable central bank digital currency network that's being built to circumvent SWIFT, while the dollar becomes Fed Now, which is the CBDC in America via the Federal Reserve, with stable coins on top, with advantages to the existing legacy banks to issue those in partnership with the technology companies. And tokens is how you get all of the custody assets to the custodians while issuing a programmable IOU of the asset so that you can own nothing and be happy. What does be happy mean? Be happy means eventually AI will drive you to a universal basic income, and that will be paid via a stable coin. So we'll own the asset, you will own nothing, and you'll be happy because we'll give you a universal basic income. And Bitcoin is the resistance against those forces.
It's so fascinating because there are so many factors that are so hard to grasp when you're just like trying to navigate into whatever there is happening in this planet. And I think I've listened to the recent hearings on the Clarity Act and everything that went on to tokenization. And I think it was Elizabeth Warren who said the Clarity Act will destroy the economy at some point, or at least it has the attention to do that. And I just don't understand why she would be saying that publicly.
Because you think of politicians as people that are representing the American people.
No, I'm not. I'm actually against most of them, to be fair.
Exactly. So most people think, why is she so crazy? Why would she say such things? These are not principled people. These are pay-for-rent prostitutes of the lobbies. The biggest interest is the banking lobby, the insurance lobby, the military lobby, the technical lobby, the Israeli lobby. These are the ones that actually determine policy, right? You go down the list, Big Pharma, and they pay Congress people, Senate people, And the military lobby through the deep state can create blackmail operations like the Epstein operation to control judicial if they want. And so this to say, people still believe that politicians represent their people. Their job is to create a narrative that is acceptable to their group while they serve the interests of lobby. And Elizabeth Warren serves the banking lobby. That's her number one funder. So in order to understand a politician, you just have to look at who they're paid for in the most degree. Now, and then most people think, but regulations is something banks don't want. Big companies want moats. They want to keep out small businesses. And then so they can pretend they're trying to protect consumers when all they're doing is they're building a moat and serving the bank lobby. And that's what Elizabeth Warren does. She's not an idiot. She's incredibly talented at her job. The idiot is the people thinking that she works for them and that what she says is true. She has no principles. They are all paid for rent prostitutes, including Trump himself. In fact, the higher you get in politics, the more compromised you have to be.
I think, well, I mean, I'm living in the Netherlands, and I've had many Bitcoiners on the show. We had a conversation with Jeff Boot, and he's fascinating in his vision on how he is living in the Bitcoin ecosystem in the way he thinks, which is completely the opposite of like normal human beings. But actually today, there was some news that came out on the unrealized gains tax that we have in the Netherlands. It has been a global topic, 36% on paper gains you have to pay. They couldn't pass it through. They actually went back into the drawing table and they have revisited it. And the only adjustments they made so far is they reduced it from 36 to 35%. And that's just a big joke in my opinion. But is that an attack to anyone holding anything in order to push them out their properties, push them out Bitcoin, and push them out their assets in order to get the control back? And if that is the case, what advice would you give to someone living in a country like the Netherlands?
Yeah, this is a really interesting topic. So when you follow the money, I deal with, again, you asked me about Michael Saylor. I say, forget the character, talk about the incentives. You asked me about Elizabeth Warren. I said, forget the character, let's talk about the incentives. You asked me about Netherlands and unrealized gain taxes. I say, forget about the character because it will be painted as a leftist movement in order to tax the billionaires so that we can redistribute wealth through a Robin Hood theory to those that are really on the wrong side of these K-shaped economies that are, by the way, created by central banking policy. But anyway, so let's forget about the policy and actually look at what will happen. Well, what will happen is that whenever you introduce an unrealized tax, you have to understand that that's a tax on the people, but the institutions hold their assets offshore via corporate structures that have exemptions from those policies. So it's an attack on the civilians. So if you charge unrealized taxes, the billionaires have corporate shells where they're exempt from those very policies. It's actually asset stripping of the regular people that they're meant to be servicing. And what else does it do? It takes those that have assets and makes them leave the economy. This is what they did in UK. And so in UK, you implement tax reforms that deliberately put stress on the markets so that all the millionaires and billionaires that have the assets leave. And then you're left with taking away the assets from the average person that didn't leave or doesn't have the corporate structure in order to exempt themselves. So this is engineering a collapse of the economy by design through austerity, through tax, policy. And what does it actually do? It decreases tax receipts. Because as you said, when all the millionaires and billionaires leave, you end up with a decrease in the amount of tax. That's what's happening in UK right now. You got inflation, you got growth that's very poor, and you've got tax policies that are leaving to all the wealth, which is reducing the tax income. That's an asset stripping exercise by the financial industrial complex. It's normally when they want to acquire key assets. So if you remember the Dutch disease phase, when everything went around like the oil and LNG industry and it caused a bit of a depression, that leads to you being able to acquire assets on the cheap. What is the key asset that Netherlands holds that is one of the keys to the future of the world? AI, part of the AI infrastructure, TSML?
ASML, yeah.
ASML, that's the one. ASML is the target. The country is being asset stripped, and the billionaires and the millionaires will leave, and those with the corporate shells will be able to exempt themselves and acquire the assets. This is a multi-cycle acquisition strategy to asset strip a country. Now, why would a politician do that? Because politicians are paid for rent prostitutes of lobbies. And the financial industrial complex was the leading power that was left over when the Dutch Empire preceded the British Empire, that now we have the American Empire. And so the financial industrial complex is asset stripping the West right now in order to reallocate capital in a multipolar world. And Netherlands is an vital node, as is UK, as is Europe, as is America, in order to concentrate wealth upwards in this whole AI and robotics trade.
Well, and then if we talk about that topic, if you are like a 25 to 45-year-old living in this country, you're stuck in the middle, you're feeling like everybody's taken, or everything is taken away from you. Like, what is the game plan?
The game plan is you need to work on a sovereign strategy and stop believing that you can vote your way out of this, because you can't. You either are going to exit and leave, set up a structure that allows you to hold your assets via trust outside, if those, however, to the extent at which you can use those, or you're going to stay and say, I'm going to pay the tax. But you need to basically, the traditional strategy of beating inflation is to own assets in a K-shaped economy. And then when enough people do that, what do? They do unrealized gain taxes. So then you get slowly stripped of your assets. And so sadly, unless you can find a way of staying in the Netherlands and exempting yourself, then you're going to hold assets to beat inflation, and then you're going to be taxed from those assets, which is then going to create selling pressure, which will decrease the value of the localized assets as well. So the only way out of that is to have a global asset, which is an impact at the geographical level, in a structure where you're not subjected to those unrealized taxes. And that can only be done in two ways. Either you can continue to live there and you hold your wealth where you're going to retire and you build it where you're going to retire, or you basically stay in the country and pay those taxes, or you leave. It's asset stripping, and nothing stops that train.
I think if I look back, I've been diving a lot into what happened in the 30s and what happened in the 20s of last century. The best way to asset strip everyone is to let them think that the markets are going well. Let them take a lot of debt in order to leverage themselves, and then crash the entire system to strip off any more assets that they have. And then it becomes some sort of communist state like Germany has been for many years in the 30s. And then you end up by taking even more control out of all the assets that are in the planet or in the country itself. Why do you think, or actually maybe the better question is, do you think that the current period resonates with 1928 or with the 30s of last century? And how could we prevent ourselves from going down in terms of a depression and everything in that sense?
I don't think that there is any way out for what the financial industrial complex will do to the West right now in the asset stripping phase. The reason is because everybody is giving them more power. Let me call the financial industrial complex the FIC for now.
Yeah.
Everybody is now contributing to index funds and ETFs. ETFs is now 50% of the market. That means that you have given BlackRock, State Street, and Vanguard 50% of all the purchasing power of the markets. That is the new neo-currency war. The Dutch created the construct of central banking, the construct of the limited liability company that led to the Dutch East India Company, and the central bank. The British then used the same construct to build the largest naval that we copied from the Dutch. And now America built out the military industrial complex, the Federal Reserve System, and BlackRock. And BlackRock is now the neo, let's call it the American vehicle that now controls the ETFs, controls the AI technology that $25 trillion of funds, central banks, sovereign wealth funds, pension funds, endowment funds, treasuries are using in order to scenario plan and allocate their assets. And so ETF is the new currency war. So you've now got currencies, ETFs, in order to dictate the flow of capital, stock markets and bond markets. They are centralized to the extent where the moment the Federal Reserve wants to do a crack up boom, it can just decrease rates and start buying bonds, which looks like the strategy that they'll be following next, which is where you effectively put everything into the stock market and then you manage capital outflows. ETFs into emerging markets are significantly higher than they were. Like they're up to like 40% of all those ETFs. So BlackRock is managing flows into emerging markets while concentrating all the wealth. 92% of the stock market is owned by 10% of the institutions in America. And then at the same time, just pumping everything. Now, what if they wanted to do what they did in the 20s? Well, all the Fed needs to do now, we're told Trump's taking on the Fed. No, he's giving them stable coins. He's giving more power to the FIC because he's paid by the FIC. And BlackRock's assets under administration is going up, which means their power is going up. And so if they want to engineer a crash, then they can just regime change the Fed, install Kevin Warsh, and then Warsh can increase rates. And they've got all the justification that they need. AI is creating a bad employment market. We've got the crisis from the closure of the Strait of Hormuz that's led to an inflationary environment. And we got the employment data. So really, they should be hiking rates. But those rate hikes are kind of being offset right now by the productivity of AI, which is creating structural unemployment in the productive sectors like tech and finance. Now, the government is employing in healthcare sector, which means that they're making up for those employment numbers by having young people look after old people. And those are in a pension crisis where the numbers don't add up. So the only thing they can do is inflate away the debt, which means structural inflation, AI that leads to unemployment. You just need to be aware of that. And what can we do about it? I don't think anything changes because the politicians are the FIC. So how do you fight back against the FIC? Well, you boycott them. You don't buy ETFs. You manage your own money. You don't. You boycott the Federal Reserve by owning Bitcoin. You boycott the banks by owning it in self-custody rather than custody. You boycott the banks by not borrowing against your Bitcoin and not leveraging up, not mining fiat currency with your Bitcoin in custody to give them more power. And you build your own parallel communities. And you make sure you're investing in the assets, and you recognize the real battle here is not left versus right. It's not the immigrants versus the natives. It is not Republicans versus Democrats. It is not Muslims versus Jews. It is not white people, black people, Asian people. These are all manufactured narratives to distract you from who's really in charge. We've regime changed the politicians in the UK. I don't live in the UK. I left in 2015. But we've regime changed 7 times in the last 10 years, more than we have in the last 40 years. And the next leader is going to be the same agenda because they all work for the same power structure. You vote with your money. And if you give your money to the FIC gets more powerful. So you have to boycott, and then you have to build parallel community structures and invest in decentralized versus centralized systems. Run your own AI, run your own self-custody structures. Don't invest in pump and dump scams with perpetual futures in ETFs wrapped in treasury companies so you can borrow against it and become a collateralized FIC obligation. That's how you win.
What do you think of the case that we see? We just had Fable 5 coming out of Anthropic that got banned by the government in the US because they don't want other countries to be using the actual AI tool. But then the topic came up of decentralized AI for whatever it actually means. You mentioned run your own AI. What's your thesis on like decentralized AI in that sense?
I think it's one of the most important things that we could do. The fact is that China is leading the open source movement for AI, which is the antithesis of what people thought it would be. Because America is moving to a control grid and they seem to be engineering a pump and dump cycle. That, by the way, here's the interesting thing about the AI bubble. Firstly, I think AI changes the world, and those that own the assets of AI is a very important part of protecting yourself. However, there seems to be an AI bubble where the VCs and the venture capitalists are selling into these IPOs, overvalued IPOs, and lockout clauses. And then the Federal Reserve controls the ability to rug pull the economy 100%. But there's also 3 structural rug pulls that China can pull if they want. One is that London, like New York, has significantly more paper derivative contracts of gold, and Shanghai has all the gold. And so the second you want to pull that lever, Shanghai doesn't have the structural derivatives paper contracts that are not backed by the actual physical. The West does. China also, if they want to start selling their treasuries, which they've been doing in a very clear and managed form, can blow out the yields, which would then need to Federal Reserve intervention to get those 10-year and 30-year bonds down. So they've got the bond market and the commodity market. They've also got the stock market, because what have they built in AI? They've built a frontier model that is 10 times cheaper at 90% of the efficiency with an open source movement. With the strategic timing of an announcement of another DeepSeek moment, you are getting massive malinvestment. Why is SpaceX, after raising billions and billions and creating an ATM where they can print SpaceX stock at a 2 trillion valuation to acquire as many companies as they can, why do they immediately move to a $20 billion debt offering? They want to raise everything they can while they're here. But why were they also in Beijing recently? Because it was the executives of the technology companies that were begging Xi Jinping. Elon had to make sure, are you going to give me my rare earth minerals that I need? Tim Cook of Apple needed to say, are you going to allow us to continue producing iPhones cheaply in our warehouses in China? Or is that going to go to Huawei? And Xi Jinping would have said, you can continue to do it, but we're going to be creating our own infrastructure. And we've now got Huawei on top of our own chips, on top of DeepSeek. And the Chinese government, for the first time, started investing in DeepSeek software through their hardware, robotics, and AI trade. So if China wants to rug pull the stock market bubble, rug pull the bond market yields to push QE again, and rug pull the commodity market, they can. But rather than do that, they met in Beijing, and Xi Jinping told Trump, hands off Taiwan, we'll both become chip independent, and let's cooperate with your tech bros. And let's build the one world control grid that is actually not an AI arms race. We can rug pull the West once you've actually raised all the money. invested in all the capex, done these extreme valuations at the highest energy costs, sold 10 years revenue forward in a model where everybody's paying based upon a narrative that we created that we're in an arms race, and if we don't do it, then China's going to win. China controls the market. AI controls the MIC, the FIC, and the TIC need China. They're not in a battle with China. They need China. They're not going to bring iPhones home and start creating them at 10 times the cost. The only thing that they're building is AI and robotics to replace people's jobs in the West, so that you eventually end up on a universal basic income. Just stop listening to what the media and politicians are telling you and the Silicon Valley bros on their podcasts, and listen, follow the money, and understand the structure of what's happening here, and then you'll realize how different those paths are.
I mean, Simon, it's fascinating to hear you speak about all these topics, but one of the questions that I actually have is, like, you mentioned before that you've been investing into companies yourself, but how do you distinguish the two, of like the vision that you have and investing into companies on the other end?
Yeah, I've so when I first got into Bitcoin in 2011, I started investing in all the Bitcoin companies, and I built a company. Ironically, the company that we built, we ended up selling to Coinbase, but it was the BlackRock of Bitcoin companies. You know, we were giving people access to buy in Bitcoin companies like Coinbase, Kraken, BitPay, Robinhood, Circle, and over 100 of the largest companies in the sector. And then I was co-investing in them, and then they'd give us more allocation because no one wanted to invest. And we ended up with all this private equity, and all of it one by one got co-opted by FIC. Now Coinbase went public for like $100 billion and ended up buying our company to work with BlackRock to tokenize securities. So it's a very ironic story. But my personal journey has been that as you grow, there is a very sophisticated compromise network through debt markets, equity markets, and then just point blank leverage that drives you into a subordination structure where you become subordinate to capital. And that subordination then leads you to what we talked about with strategy in the beginning. It doesn't matter what you're saying. It's who you work for, and who controls your voting rights, and who you're in debt to, and who's got leverage over you that determines your behavior. So what I've done is I've now focused on, imagine a spectrum of completely sovereign and completely subordinate. On one scale, completely subordinate means you are in debt to the banks for everything you own. You've got shareholders that control the majority of your voting rights and structure. You are dependent upon one job. You have assets that you can only gain access to when the bank or the broker gives you permission. You hold your gold with a custodian, your Bitcoin with a custodian. Your government will determine whether you have to sell your assets or not through unrealized gains. All of these are subordination vehicles. Your assets, your passport, your work, your business are all subjected to one jurisdiction. That means you're completely subordinate, and you will be subjected to the rules of the whims of those that are in control. On the other side, you're sovereign. Sovereign means you have assets that you can access with no permission from a bank or a broker or a custodian. You have multiple income streams that exist in multiple jurisdictions that are held within multiple structures, whether it be trust, whether it be self-custody, whether it be money that you own via, these are all the types of things that you need to do. Now, over time, I sold my business, and I've gone from 100 private equity investments as they went public down to about 40. And then I transfer that into an allocation of, I don't want to talk about it for security reasons, but an allocation of what I believe is the most sovereign place you can end up. And that's my journey. Is it a journey? And then you decide where you live. this is like a 10-year plan that everybody needs to set today. Then I start thinking about, what if my website gets taken down? I'm subordinate to YouTube, to X, to Spotify, to Apple, to ChatGPT, to Anthropic, to Amazon. And I work through that and I go, well, what's an alternative to that? And it's overwhelming if you try and do everything at once, because you're not. Well, maybe I can start posting on Nostr. Maybe I can start hosting some of my web services on a more decentralized structure. Maybe I can hedge my bets from fully subordinate to US structure to having US structure, Chinese open source structure on my own environment, and maybe a decentralized structure. Well, it doesn't exist. Can I invest in it? Is somebody trying to create it? And so that is my decision making now. My day is I wake up and I say, this week, am I more subordinate or am I more sovereign? And everybody needs to start that journey today. And I think it starts with small actions. One action is maybe you have no Bitcoin in self-custody. Learn self-custody. Learn how to run a node. Another action is, who are the custodians that could tell me my money's over? Maybe I need some stable coin. But what happens to those stable coins? Can they be frozen? Okay, what's the alternative there? Do I need a community bank versus a large multinational institution? And one by one you work through it. Well, what jurisdictional exposure do I have? And you work through it bit by bit. Now, that's a game for eventually the wealthy. I get it. So your first job is to own more Bitcoin this month. And guess what? We are likely, don't trade upon this, I could be completely wrong, but we're likely in an extended period of market manipulation to centralize as much Bitcoin as possible for Wall Street. Which means that if you're buying every single month and dollar cost averaging, you might be getting cheaper and cheaper Bitcoin every time you receive your fiat currency. So you're taking your fiat currency, you're exiting, you're learning to self-custody, you're running a node. That's the first step. Measure your wealth in Bitcoin, so the further the price goes down, the more Bitcoin you end up with, rather than measuring your wealth in fiat currency. And so through this mechanism, you're becoming slowly but slowly more sovereign, because what can you do with that Bitcoin in self-custody? Well, you can own it without a bank, you can spend it without government permission, and you know the monetary policy no matter what the central bank does. Same with gold. Same with other things. So you work through these strategies. And all I'm saying is, every week ask yourself, did I take an action that made me more subordinate or more sovereign? If you're more subordinate this week, then do something that makes you more sovereign this week. And do that for the next 10 years. Because everything they want you to do is to become more subordinate, more centralized. You will own nothing and be happy, because we're entering into a world of the asset owners, which is fewer and fewer people with more and more wealth, and those that are going to be on the UBI programmable money, Orwellian social. Now, if 100% of your money is fiat currency, then you're 100% subordinate to the CBDC stablecoin structure. If only 1% of your money is in fiat currency, because you've got enough for 6 months in your bank, then you can lose that 6 months and you still have the rest of it. And that's the ratio. We all have to be subordinate to a country, to something. But it's going to be, how can I get the ratio more and more to more sovereign? And that's what everyone should be doing.
I think that's a really good monologue. And me personally and a lot of my friends are on that stage of becoming more sovereign, clearly understand a little bit more about how the world actually works, also due to the content that you create. But there is still a big hurdle in order to make the step of like leaving a country. And as you have left the country 11 years ago, how did that transition for you?
Yeah, it's a very difficult decision to make. And it depends. Have you got children?
I don't know.
Your family life, all that type of stuff. So, it's easier to make that decision the less dependencies you have. It becomes harder and harder to make that decision, because most people, they end up with a physical business or a physical job connected to an office with a tax structure they understand, a community that they built, a family that they love, all of these things. They tie you into a jurisdiction. So the longer you delay that decision, the harder it gets. However, the wonders of the British Empire and the Dutch Empire were that the wealthy still want to live in UK and Netherlands, but they want exit vehicles. All this to say is that once you become more wealthy, you have the ability to become more sovereign, because then you can afford the structures of legally owning your assets in another jurisdiction while living in one jurisdiction. And sadly, most of those assets are only available to you when you're willing to spend more money. But with more and more AI tools, I'm starting to notice that the cost of that is going down significantly. These tools are going to be available through AI agents in the future. And so those tools, everything is about ownership. So what was it I said? About owning your own Bitcoin. Well, if you own your own Bitcoin, then it's not pretty tax efficient if you own it. But what about if you own a trust structure and that trust structure owns that Bitcoin? Then you need genuine substance in a foreign country. That's expensive. But maybe you can delay that decision. So, again, these are big decisions, but there are incredibly wealthy people that live in America that are not subordinate because they've divvied up their wealth around these global opportunities that exist now and are more accessible than ever before.
If you discuss all the sort of attacks that are happening when it comes to Bitcoin, or at least confiscating as much Bitcoin as possible by Wall Street and like the FIC, how do you see the coming 5 years for Bitcoin in general? Like, is there not some sort of fear because it's the opposite of what Wall Street wants, which is like getting all the Bitcoin instead of you?
Yeah, the future of Bitcoin is a battle between centralization and decentralization. Fortunately, there are some very fortunate trends that I believe are happening on the macro and geopolitical side that will help us. One of those is that there was originally a lot of centralization of Bitcoin mining in China. When China decided that they didn't want to support the industry, it relocated, but a chunk of it went over to Wall Street in America through Texas and created a centralization force through Wall Street. BlackRock now has ETFs and invest in all that, and they're trying to gain more and more control there. Now, I believe that the financial industrial complex, the FIC, is systemically asset stripping the West in favor of a trend towards a multipolar world. The largest sovereign Bitcoin miner in the world is Iran. And that was probably with nuclear energy. And that was then integrated into a structure with UAE that now has left OPEC, has FX swap lines, and is hosting a network of Enbridge central bank digital currencies. At the same time, they've integrated into Hong Kong. Hong Kong is the front to China. Hong Kong is now doing a lot of changes there. UAE became the center of much of these crypto and Bitcoin companies. El Salvador built a sovereign, Bitcoin strategic reserve for their country, where you can look it up on chain. Now, they still have a lot of subordination to IMF, but as that value builds, they'll have more negotiation leverage. We started to see that the second largest sovereign Bitcoin, miner, so you had the public companies in America, you had China, you had Russia, you had Iran. A lot of these countries hate each other. So if we're moving to a world of multipolarity, then Bitcoin mining is being geographically diversified. We got too much exposure to American public companies that host the FIC right now. That's on the mining side. What happened on the node side? Well, we gave too much power to one team of developers called Bitcoin Core. Immediately, they started making changes that many people disagreed with because no one was looking at keeping their eye on the ball. We had a resistance movement that came along and said, hey, here's an alternative node implementation. Now we can choose between two different nodes. That's a good thing. Now everybody's asking questions. We had a regime change at the developer side as a result of exposing some of the different compromise operations. These are all really good things. This is an open source boardroom. So we're significantly better off on the code side because we're questioning and we've got alternative implementations. That battle is going to be, continue to go through. What about on the ownership side? Well, everyone, we gave up 3 to 4 million Bitcoin to Wall Street. So now they've got, it doesn't matter. It's not proof of work. It's not proof of stake, sorry. So we're okay. But we're giving them the vehicles with paper Bitcoin to manipulate the price by centralizing as much Bitcoin as possible, which represents the amount of paper Bitcoin they can create, which represents the amount of manipulation they can do on the price. We resist against that. Fortunately, the vast majority of Bitcoin is still in self-custody. And so we continue to monitor that we are in a battle for centralization versus decentralization. And we shouldn't take that for granted. So the future of Bitcoin is how many of us are going to participate in the real battle of self-custody, running nodes, and engaging in the open source boardroom and supporting initiatives for more decentralized self-mining. That's what the future of Bitcoin looks like. And if we win that battle, either Wall Street will control the short price to manipulate more over there, and if you fall for it, you'll just be the person that gets margin called in a perpetual future with like Nakamoto right now, where 85% of their Bitcoin is held as collateral in Kraken, which is now a bank. Mm-hmm. And I am a shareholder in Kraken. Once it IPOs, I'll be exiting that position. But this is the type of thing that you have to recognize. But the rules of Bitcoin haven't changed. You can own your own money, you can spend your money, and the monetary policy will never change. But the paper Bitcoin market has changed. And we have false profits that people are idol worshipping. Understand the incentive structures, because the whole game of Bitcoin was incentive structures, governance, game theory, and rules that are enforced through mass and code. That's the real game.
In an ideal world, for you, what needs to happen?
I will continue to try and advocate for as many. In an ideal world, more and more people need to become sovereign. That's it. Mm-hmm. Because we vote with our money. And when we're sovereign, nobody can get in the way of that vote. So my mission is aligned with yours, because most people are subordinating. Most people are becoming more and more subordinate. Most people are, you will own nothing, and they're not happy. So once they pay them a UBI and a programmable money, they'll be happy thinking that that UBI means they don't need to work anymore. That is a weak person. That is somebody that we're getting more and more people that are choosing suicide over life. Those trends are going in the wrong direction. That are choosing not having a relationship because men and women hate each other. That are choosing not having children because they think it's unaffordable to have a child right now. That's extinction. That are choosing isolation. That are choosing, or they're unable to afford food that is the nourishment that they need because their farmers are going bankrupt and being rolled up into a petrochemical company that's poisoning us. More and more people are being aware of the psyops. More and more people are being aware. But if you continue to believe that it is changing the politician and voting harder that is going to change this, then you're stuck in a proof of stake network with a foundation that was funded by Silicon Valley to steal as much Bitcoin from you as possible. And so what do we need to do? We need countries that are able to become as sovereign as possible in a multipolar world. They can choose between China Belt and Road Initiative, IMF, or even building their own assets, their own sovereign wealth funds. There's a reason why it's called a sovereign wealth fund, and they can use their own resources in order to build that. Companies need to use jurisdictional arbitrage to become as sovereign as possible, and individuals need to become as sovereign as possible. That's what needs to happen in an ideal world. Now, I am fully aware that the vast majority of people won't do this, won't listen to this, won't hear this, And so we just need as many people that are going to be living, because the vast majority will be collateralized debt obligations on a UBI in a transhumanist agenda that will make people extinct. And we need sovereign. Here's what I'll end with on that rant. There are two types of people the system doesn't mind. One of them is people that are broke, subordinate, and loud. They can complain about children being used in sex trafficking operations to prop up blackmail operations in the Epstein class. No one cares. They ain't got any power. They can yap. They got freedom of speech. They can talk as loud as they want, and no one will do shit because they don't matter. The other type is the wealthy people that are subordinate, the Elon Musks. Elon Musk depends upon military funding contracts, borrowing against his stock, so that he is leveraged to the kilter to buy assets like X, which are being used to build social credit scores. And the so-called trillionaire is dependent upon the FIC to issue more stock, create an ATM, borrow against it, and fulfill their agenda that gets them more government contracts so that they can push that data back to the NSA, and they can build out people's social credit scores. That's subordination. They don't mind incredibly wealthy people in their control grids. What they don't want is people that can talk because they don't have to worry about the bank or their shareholders, that has wealth outside the system that can't be shut down, that is incredibly wealthy, that can then actually make a change. They can lobby, they can send a message, and they can reallocate their capital. So we need more of those. And there's very few of those. Most people are subordinate to their sponsors, subordinate to the algorithm, subordinate to the debt of their bank, subordinate to their shareholders, or subordinate to an oppressive regime, whatever it may be.
Actually, I've been listening to your conversation with Peter McCormack, where you discussed the proof of reach concept. That I know the algorithms on social media platforms, centralized platforms, are constantly changing. And me as a podcast host, but as a content creator, if we release it on X, we get like 500,000 views. If we release it on YouTube, it shuts it down for no reason. Or like some of the episodes are doing really well. You need to apply to that. You need to be compliant with those algorithms in order to get the big reach. But I think overall, I'm going to end it off. We can go on for another hour if we want. I actually tried to not talk about Iran, but you got it in there at like 50 minutes. I think it's a super important topic, but I think that what you have been telling here is fascinating, and I would like to thank you for that. It's opening up my eyes. It's continuing my progress on my journey to become as sovereign, as well known as possible, or knowledge as possible. So I would like to thank you for that. For people that are looking to read more upon your content, I'm sure that they will find you, but where can they find you?
Yeah, we can come back and do another podcast on Iran and how it relates to you, because it really is changing the world. Have no doubt. The fact that the deal that has just been signed is bigger than anyone can ever possibly imagine. You know, this is a major moment, so I'll leave that cliffhanger for another episode.
That's good.
But I give real-time updates on X at Simon Dixon Twit, from when it was called Twitter. And I try and always follow the money and retranslate things in a meaningful way, if you enjoyed the types of updates I give here. Then I have a YouTube channel, and for myself, it's Simon Dixon 21. But I do like 2 to 4 hours every Friday where I go through all the events. And for myself, I retranslate them in terms of the monetary impact and make projections of where I think it goes, and then analyze what I got wrong. You're welcome to join me on YouTube, subscribe, and get those updates. But then some people just don't have time to listen to that. So I built a structure on simondixon.com that takes those big updates, condense them down through AI into a written blog, 5-minute video, 30-minute video. And then I'm trying to build a membership site. No sponsorship, no agenda. I'm at that stage in my life where I can do that, very blessed, because of these sovereign approaches. So that in case I get shut down on any of those networks, on my podcast or anything, at least we've got a community where I can still give these updates without YouTube saying no.
Well, all the links will be in the description beneath. And once again, it's been a great conversation. I would like to thank your time. And yes, would love to do another one. Hopefully in like a few months when Iran or something else is happening, there's always enough to discuss. So thanks for your time and being part of our show.
Thank you for having me. I enjoyed it a lot.